When it comes to meme stocks, if there was any honesty in financial press, it would look like this. The brokerage firms that sponsor us would go bankrupt if there was another short squeeze, so we think it's a sell. Now, what my Keynesian evil twin just illustrated there is that financial press has a conflict of interest when it comes to their coverage of meme stocks. The companies that own these networks and these websites accept advertising revenue from the same hedge funds, market makers, and brokerages who stand to lose significant amounts of money if these meme stocks run like they did last year. What's up, guys? I'm Nobody Special, and it looks like we may be in the early innings of a replay of last year's meme stock mania. For the last couple of days, stocks like AMC and GameStop have been very slowly ticking up, and it looks like this morning these stocks are all kicking into overdrive, notably AMC and Hycroft Mining following the deal that was announced on March 15th. Now, you never hear much good about these companies in traditional financial press. Why? Because these networks get most of their revenue from large hedge funds and asset managers and brokerage firms and market makers, all companies that stand to lose big time if GameStop and AMC and some of the smaller plays start to squeeze like they did last year. They never disclose that in any of their negative coverage. When Jim Cramer goes on CNBC and he talks about how this Hycroft Mining deal makes no sense, he doesn't mention that this is a short squeeze play and that all the sponsors on CNBC stand to get wiped out if these companies squeeze. Which, by the way, while we're on the subject, I will always be 100% transparent with you about where my financial interests lie. As of today, I have small positions in GameStop, Hycroft Mining, and BBIG, and one of my largest positions is in AMC. So I have a financial incentive for these stocks to move one way, and therefore I have a conflict of interest, all right? My coverage and my discussion on this topic will be the bullish case because I want the stocks to go up. I'm not going to lie to you about it, but I'm hardly neutral on the subject, am I? And it's also worth noting that as of today, my channel has no sponsors, so I have no other incentives one way or another. I just want to repeat, my channel has no sponsors. Anyone? Sponsors? Anyone? Someone in the back? No? No? Now, this morning, AMC, GameStop, and Hycroft Mining are all running like crazy, and it looks like we may be in the early innings of another short squeeze. So imagine my surprise when I saw this article on Motley Fool this morning, and with that, we are going to shrink my big, fat melon of a head. And here we go. At 8 a.m. this morning, 3 stocks to avoid this week on Fool.com. And those 3 stocks just happen to be GameStop, AMC, and Chewy. Now, for the purpose of this video, we're going to focus on what they're saying about AMC. And just look at what we have here on the first line down. AMC shares have back-to-back weeks of double-digit gains despite the company's problematic investment in a penny stock that has only gone down. A penny stock that has only gone down. All right? Keep in mind, this is at 8 a.m. this morning. This article was published. At 8 a.m. this morning, Hycroft Mining was up almost 40%. And as of close of business on Friday and after hours trading, Hycroft Mining was up over 23%. So when this article was written, the author knew that Hycroft Mining was considerably higher than the value AMC paid for the company. And yet they have written about AMC's problematic investment in a penny stock that has only gone down. Let's see what else they have to say about AMC. The puzzling purchase of a penny stock miner continues to unravel. The mining company shares have fallen since the AMC deal was announced, and last week the miner diluted its investors in a cash-raising move. So if you didn't know better and you read that article, you're probably thinking to yourself, wow, AMC invested in a penny stock gold mine that's only gone down. What an idiot Adam Aron must be. But if you look at the numbers, the truth is a totally different story. Now, for that, you have to look at the details of the deal. AMC invested $27.9 million in their stake in Hycroft Mining. Now, for that, they got 23.4 million shares at a price of $1.19 per share. And they also got 23.4 million warrants that entitles AMC to buy 1 share each at a price of $1.07 per share. Now, as of the making of this video, Hycroft Mining is trading at $1.96 per share. And for the love of God, this is the 3rd time I've done this math because Hycroft Mining will not stop going up this morning. So by the time this video gets published, who knows what these numbers are going to be. So at this point in time, at $1.96 per share, AMC's stake in the company that they bought, the shares alone are worth $45.864 million. Now, if AMC were to exercise all 23.4 million warrants for $1.07 each, on top of the 23.4 million shares they already own, AMC's combined position in Hycroft Mining would be worth $91.728 million. And after paying $27.9 million for the shares and $25.038 million for the exercise of the warrants, that means AMC's position in Hycroft Mining would be up 139% in 2 weeks. But wait, Jack, let's shrink your melon again, because what did Motley Fool have to say? Motley Fool said the mining company's shares have fallen since AMC's deal was announced. Now, on top of that, at the time the deal was announced, AMC shares were trading for $13.76 a share. And again, as of the making of this video, the shares are trading at $24.05 a share, up 75% since this deal was announced. And I have to reiterate, at the rate these stocks are climbing right now, I have no idea what the share price is going to be by the time you watch this video. Go check when it's over. It's probably a lot higher. So why is Motley Fool painting a picture that this deal has been such a horrible arrangement for AMC? AMC shareholders are making out like a bandit, as are Hycroft Mining shareholders. And again, full disclosure, I own both companies. So please keep in mind where my interests lie, but at least I will tell you up front where my interests lie. Now, to find out where Motley Fool's interests lie, we have to dig a little bit. This is thefool.com/The Ascent, otherwise known as How Motley Fool Makes Their Money, and here they're nice enough to list their advertisers. And just scrolling down this list, let me know if you hear some names that might sound like companies that have a vested interest in AMC or GameStop shares going down. Let's see. Bank of America, Capital One, JP Morgan Chase, Citibank, E-Trade, Robinhood. Wait, is that the same Robinhood that took away the buy button last year because they were about to get wiped out when those hedge funds couldn't make their margin calls? That's right, the same Robinhood that has a vested interest in these stocks going down. They advertise on Motley Fool. That's interesting. Who else? TD Ameritrade, another brokerage that stands to lose big time if these hedge funds can't cover their margin calls. Are you starting to see why you get nothing but consistently negative coverage of these stocks, no matter what they do, no matter how far they run or how bullish the technical case for some of these companies might be? You never get an ounce of positive coverage in traditional financial press, because traditional financial press gets paid by the companies on the other side of that trade. And again, don't just take my word for it, because I get paid on my side of the trade. I have long positions in AMC, GameStop, BBIG, and Hycroft Mining. So long story short, when you hear in financial press that this AMC Hycroft Mining deal is a bad deal for AMC shareholders, keep in mind, folks, as of the making of this video, that deal is already up 139% in 2 weeks. Can somebody tell me what an annual rate of return that is? I don't know. But to anybody who's actually looking at the numbers and not just reading Motley Fool coverage, it sure looks like a pretty good deal to me. Keep that in mind when you see these negative reports. You have to wonder, how are these companies making money? And at the same token, keep in mind when you hear about these things on YouTube, you also have to keep in mind where are the financial interests of the YouTuber who's talking about it. And I will always disclose what my positions are. And if you want to know more about the convoluted mess of a story that is the AMC Hycroft deal, you can check out this video that I made that talks about who the key players are and how this is actually a squeeze play and not AMC wanting to get into the gold mining business. Till next time, live small and dream big.